Greetings. Today is Friday, June 28th, 2024, and it is the last trading day of the first half of the year. So as you know, we shoot the Monthly Market Monologue every month, the first week of the month. And by the way, if you have not already subscribed, we certainly hope that you will subscribe to the channel. Please also hit the like button on the video and maybe even leave us a comment. All of those actions help the YouTube algorithms. We certainly appreciate you doing those three things. But in next week's video, I'm going to spend a bit more time looking at some of the economic data. If you watch our channel and you get our blogs, you know that a week or two ago, I believe it was the 17th, I published a blog that raised the question about whether or not we are already in a recession. I'll review that with you today. However, if you have not read the blog, you can read the blog by going to Hicks-Associates.com and just click in that top right area where it says blog, and you'll see the blog post. First thing I want to touch on is the Atlanta GDP Now tool. We look at this fairly regularly, and you can see that as of yesterday, the Atlanta Federal Reserve is forecasting the second quarter GDP will be 2.7%. They are going to release another update today, but again, today is the last day of the quarter. But according to the Atlanta Federal Reserve, GDP for the second quarter should still be positive, which raises the doubt about whether or not we are actually already in a recession. That said, let's look at the unemployment rate, and then we're going to look at that new recession indicator that I stumbled on and blogged about a week or two ago. So this is the national unemployment rate. We are sitting right now at about 4%. And you can see that there's been some gradual increases in that rate. Well, doing some research and fellowshipping with one of my CMT brothers, he pointed me to the Schannep Recession Indicator, and I hope I'm saying that gentleman's name right. But the Schannep Recession Indicator uses the national unemployment rate and the 3-month moving average. So on the top part of the pane is the unemployment rate with that 3-month average. Down here is the indicator that we are really looking at. And according to Mr. Schannep, when that indicator rises 0.4%, that is when a recession officially starts or is about to start. And if you can see with the gray bars on the screen, each time this rate rises above this black horizontal dashed line, we see a recession start. So that is Mr. Schannep's recession indicator, suggesting that we might very well already be in a recession or one is rapidly approaching. I'm going to look a lot more into that next week in our monthly market monologue, so I hope you will tune back in for that. And again, if you haven't already, please hit the subscribe button on our channel, hit the like on the video, and then maybe leave us a comment. And you are more than welcome to share them with your friends, colleagues, etc. So until next week, thanks for watching, and we hope you have a wonderful Independence Day week, and I'll talk to you soon.